we have another question I'd love to answer today. It says, do you have a system that you use that helps make paying these quarterly taxes more seamless and potentially less painful? Oh, taxes are just going to be painful, but let's get into it. Thank you to TherapyNotes for sponsoring us. So I think all of this starts with putting aside the right amount for taxes into a business savings account. A lot of banks will give you a free savings account with every checking account. I highly recommend having a savings account that is exclusively for taxes. And that way, the only time you ever touch it is to transfer funds when you are paying some taxes with your operating expense account. So depending on how you're structured tax-wise, if you're a sole proprietor, it's probably going to be more painful from a financial perspective than if you're what's called an S corporation. If you're an S corporation and you're trying to do this yourself, it's going to be a lot more painful from a paperwork position, which is why I highly suggest hiring an accountant. I know that that's not the answer a lot of people want. They want the DIY version, but even when I was DIYing all sorts of things in my practice, I was paying an accountant, partly because I'm a rule follower and I didn't want to get in trouble and go to like tax jail or something, but also because I'm more apt to screw that up than some other things, because we don't know what we don't know. And just like there are accountants for a reason, there's a lot that they know that we will never know. So in hiring an accountant, what I would suggest is asking other small business owners that you might know. Or if you don't know any small business owners right now, calling around and asking if this person has experience working with small businesses. If you're currently a sole proprietor, ask them at what point it makes sense for you to become an S corporation. This answer is going to vary wildly based on your city, how much they charge, your accountant's personal opinion. I've heard anything from once you're making $25,000 a year, you should become an S corporation because it's going to decrease your tax liability, to wait until you're making $80,000 a year. So again, it's going to vary wildly. And it also has to make sense for what you're paying them, because you're going to pay them more as an S corporation, meaning the accountant. You're going to pay the accountant more because they're doing more work for you, but you're going to pay less in taxes, and you're going to pay over the course of a year thousands of dollars less in taxes as an S corp, and hundreds of dollars more to your accountant potentially. So to me, makes a lot of sense. I mentioned earlier putting aside money in the savings account. Talk to the accountant about how much you should be putting away. When I was an S corporation and a solo practitioner, for a long time I was putting away 20% of gross, and that was fine. I always had a little extra left over, but not like a ridiculous amount left over. Your tax situation might be different. It also depends on like a lot of things, including your partner's take home. Like if you end up bumping each other up into a different tax bracket, you're going to have a surprise. So talk to your accountant, find an accountant. They're there for a reason. And a really good accountant, in my opinion, well, they might be a great accountant, but the kind of accountant I want is one who can dumb it down for me. Because I'm going to be honest, I don't understand a lot of tax things. We'll call them things. That's how little I know. There's a lot I don't understand about taxes. So working with somebody who will explain it to you on your level, I think is really invaluable, because you need to know where your money's going and why it's not going some places and others and all that. That way you know you're doing things in a legit way. All right, that's what I got for you guys today.